Hi, and welcome again to another edition of Market Analysis for today, Monday, the 9th of 2024. This is a recording for Vantage Markets, about an hour previous to the USA Open. All right, so let's take a look at the markets. The S&P and the Nasdaq continue to make all-time highs almost every day. However, the Dow and the Russell are diverging significantly, and breadth has been quite weak for the past several days. Something has to give soon. Now, we are going to see another strong surge higher led by expanding breadth and a cash up in the Dow and Russell, or we're going to see some amount of retracement in the S&P and the Nasdaq. There's no resistance above recent print highs in the S&P and the Nasdaq. Downside levels in all the indices are very well defined. So let's take a look at where we could probably come in and just speculate where we could probably find some resistance levels. And to do that, let's use the trend-based fib extension. So we want to be able to measure at least 2 or 3 candles. So let's just measure the movement from the middle of last week, from Wednesday, to the high made. To the high made so far. What's happening here? Hold on. What the heck? All right. So again, let's use this point and this point. Where are the levels though? All right, so let's use this. Let's just use these 2 levels. The 0.38 and 0.618, which are the golden ratio. So, all right, so let's use it again. There we go. Let's use those levels for our possible levels of resistance using the Fibonacci tool. So we measure from the low of Wednesday, from the open of Wednesday, to the high so far today, and then just basically where the low was today. So we're expanding that movement, and then we have those levels, and we could use them as probable levels of support, of resistance. The downside, this was previously a resistance level given by the golden ratio. So let's use that as our probable first level of support. And then the second one could be the lows created previously on that same day. So we have here our levels for the Nasdaq. Now, you could also find the pivot point, which is by the typical price, which is adding the previous candles, high, low, and close, and dividing it by 3, and that'll give you a pivot point for where the market could probably come and fluctuate towards that. So just to do the test, the example. So we place our cursor on the previous candle, and then we look at the levels at the high 21,666 plus the low 21,422 plus the close 21,632 equals, divided by 3, 15,240. Now that is way too low. But hold on, 21,666 plus 21,422 plus 21,632 equals, divided by 3. Now 21,573. So 21,573. Let's get one of our 21,573. 21,573. And that will be your typical price, which is is given by that, almost by when we placed our level of support, which is the high of from Thursday, and that was a level of the golden ratio. That was what the golden ratio was pointing, and that was really where the market stopped last week on Thursday. But then Friday it fluctuated above that. But we can use that as a pivot point, and you can do the same for the other assets, and we can use it as obviously a level where the market, if the market is above it, you can use it as support, and the market is below it as a resistance. Okay, and from here you can also use some percentages of probable movement. So it all depends. It has a lot of applications anyhow. So that's how you obtain it. Let's go move on to the S&P 500 and take a look at where we can come in and find those levels. So we just fluctuating above this one. I'm gonna just make last Friday's high as a possible level of resistance in 61.20, since we really haven't really broken any. So I'm gonna leave the same level of support that we had from last week, and let's see if we'll make another all-time high, or will there be a retracement on both the Nasdaq and the S&P, because the Dow seems to be looking to recuperate. So we have obviously broken that level of support since we closed below it. The second one haven't. So let's just use the 20-day moving average as our second level of support and leave that first one there. We can come down and use 45,000, nice psychological round number for our first level of support, and then kind of like that previous highs for the Dow. So there we have our levels for today for the Dow. Looking to trade higher. Then let's take a look at crude oil. Crude oil, hey, it's looking to recuperate everything that it lost on Friday. So let's see if the momentum will continue to move higher. So going long, crude oil. Nat Gas has opened with a serious gap up today. So let's see if that will be closed. They will attempt to close it, but it didn't quite make it. So let's use this level as our first level of resistance, and 330 as our second one. Now, support for this gap up, let's just use, it's probably right there in the middle anyhow, which I was just looking at the high on this candle. So that's our first level of support, and then the 20-day moving average as our first and second. So the gap up is a very noticed gap up, so going with the direction, buying it. All right, so gold is breaking out of that range that has been there for quite some days, a couple of weeks, 2 weeks on there. So let's see if 2665 will be that level of resistance that we anticipate, and 2700 could probably be the target for the month by the end of the week. Sorry. So let's see if that will happen. Let's leave the level of support that we have had in the past. So continue to move higher. So be long. Wow, silver's parabolic movement to the upside, strong. So 32,200 is going to be our second. Let's just leave that puppy there. The 20-day moving average is our first support, and let's just use that low wick as a possible level, let's say a level of support. But going with the trend, which is higher, buying it. Then copper's also moving higher, doing a nice breakout to the upside. So let's leave that first level of support where it's at. Second one for the week. Let's see if by the end of the week we'll reach that 440, a bit higher, which I'm using the double top here. So let's list that out. Support levels, I'm just gonna leave them as they are. Okay, so Bitcoin. Bitcoin, prices are weaker in early trading today on a corrective pullback, as we look at it from recent solid gains that saw prices last week hit record high of 100,000, and quickly, as you see that here, quickly making such a strong dip, on that happened last Tuesday. So wow, I mean, yeah. So that corrective pullback from that recent solid gains saw prices last week hitting that record high. A price uptrend remains in place on the daily bar chart, and bulls still have the firm overall near-term technical advantage. So let's see if it'll follow gold's direction to move higher above, again, to fluctuate above 100,000, and see if it'll close above 100,000 today. Now, let's use the 20-day moving average as our first level of support, and then the second one, let's just use the lower band. Bitcoin moves, like you can see here on this candle, by thousands. So yeah, so overall to the upside, the currencies are looking to stay strong, moving to the upside on as far as for the euro goes. So let's see, it opened with a gap up, with a gap down, sorry, because this kind of close here and this one opened down here. It opened with a gap down. It continued to fluctuate lower, but it's now recuperating, has been closed. So let's see if 106 will be that target for today, since we have kind of violated that level of support. Let's just bring that puppy down a bit, and let's just use this levels here. All right, so yeah, I'm looking to buy. The pound also opened up with a gap down, continue to move briefly, but now it has recovered, looking more bullish. So let's use the 50-day moving average as a possible first level of resistance for the pound, and the dollar index is just looking to see if it'll do some more fluctuation to the downside. Let's use a 20-day moving average in the lower band and see if it'll continue to move higher. That's it for today. Have a great trading day, and I'll see you tomorrow.